Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario on the 1 hour chart where we're looking for an expanding diagonal, which by itself is a rare scenario, so that is something that we have to keep in mind. But in this scenario, all of the waves are three-wave structures to either the upside or the downside, with wave 3 being a finished zigzag to the upside, and now we're looking for a zigzag to the downside. Wave C so far went to the 2.618 trend-based fib extension taken from the high to the low of A to the end of wave B, which is an uncommon target for wave C, but it is still a target for a wave C. It is, however, a common target for wave 3. The remaining target area for your wave 4 is the 786 to the 886 Fibonacci, taken from the low of 2 to the high of 3, giving you a target area between 63.9k and 63.4k, with the invalidation being just below price at the moment at 62.9k. In this scenario, we want to see price move towards the upside impulsively for then another zigzag in a wave 5. The common target area for your wave 5 is between the 1 and the 1.618 trend-based fib extension, taken from the low of 2 to the high of 3 to the low that we have at the moment over here. This gives you a target area between 68k and 70.7k. In this area, we have some additional resistance as well, which is the blue box here, sitting between 68.2k and 69.2k. And as we're talking about resistance, we also have a little bit of a local resistance, the daily naked point of control here at 64,850, and also support. So we're currently bouncing on my box over here, 63.9k was this box, and we have the weekly naked point of control at 63.5k, which, as you can see, is still untouched. Now, after this wave 5, we are looking for a bigger retracement to the downside, as this expanding diagonal is thus finishing a wave 1. We want to see a wave 2 to the downside, a three-wave corrective structure, after which we look for continuation to the upside. The alternative scenario is a bigger diagonal, contracting diagonal in this case, where the beginning is a WXY, double zigzag in wave 1. And that is allowed because all of the waves in this particular scenario are also three-wave structures, so also zigzags, but they should be part of the zigzag family, and a WXY double zigzag is part of the zigzag family. So we then have a wave WX and a wave Y, looking for a simple ABC to the downside. Again, wave C hitting that 2.618, which is very extended for a wave C. And in this scenario, talking about a wave 2, your common target areas in blue, the golden pocket to the 786, taken from the low to the high of 1, giving you a target area between 62.5k, 61.2k, and this is the 05 to 382 area, which is a little less common, which is between 64.3k and 63.4k. In this scenario, we pretty soon preferably like to see a zigzag to the upside for this wave 3 over here, after which we want to see a 4 and a 5, and then after 5 we look for a retracement to the downside, as is the end of wave 1, and then we look for a wave 2. If we go to the bearish scenario, then we're looking for an impulse to the downside. So this is where you actually like to see the 2.618, because in this particular scenario, the move of the low is labeled also a WXY double zigzag, in then a bigger flat for a wave A, B, and eventually a wave C. So in this scenario, the wave Y went to the 0.618 trend-based fib extension, taken from the low to the high of W to the low of X, which is a common target, so that is fine. But what we are looking for in this scenario is an impulse to the downside. 1, 2, 3, bigger 4, and then eventually a 5 to the downside. And what we want to see is preferably a wave 4 that is the length in time of this wave 2 minimum. So if I pull a trend-based fib time from the low of 1, which is this one over here by the way, to then the red candle, which is the end of your wave 2, and then I click at the low that we have at the moment, then for this scenario, preferably you want price to range at least until the 1-to-1, as it is most common for a wave 4 to be longer than wave 2. So we are looking for a wave 1, 2, 3, sideways 4, and eventually a 5, where the common target area for your wave 4 is between the 1 and the 4 fib time. Now the 1-to-1 is sitting on Thursday, 7 p.m. Central European time, and the 4 fib time is on Sunday, the 28th of April. So we still have more than enough time, but we want to see price ranging for a longer period in this particular scenario. What we don't want to see here is price moving towards the upside and hitting the 0.618. And the 0.618 is currently sitting at 65.7K. The common target area for a wave 4 is the 0.236 to the 0.5 Fibonacci, 64.3K to 65.3K. If price moves towards the upside before reaching the fib time levels and at least make another low for a wave 5 in a 1, 2, 3 sideways 4, 5, then it invalidates this scenario, increases probabilities for an ABC and continuation to the upside to take the high. If we do range for a longer period and then make another low to the downside, it increases the probabilities for this move to be an impulsive structure and then a wave A, looking for a 3-wave correction in B, and then eventually a 5-wave move to the downside in a wave C to take the low. Now, the most common flat pattern is an expanding flat, where the common target for your wave B is between the 1.236 and the 1.38 Fibonacci, taken from the low to the high of wave A, which gives you an area between 57.7K and 56.6K, which is quite nice, as it is in confluence with this support resistance area that I have over here as well, which is a 4-hour order block. And then we're looking for an impulsive move to the upside in a wave C to take the high of A. So currently the range that we are forming is very important for the probabilities of the different scenarios. Now, one scenario that I just like to talk about is this flat scenario here. I've also covered it in the live stream yesterday, and I mentioned it earlier that this is an incredibly ugly flat scenario. If this is your wave 1 here and all of this is your wave 2, it's very low probability that your wave 2 is almost 14 times longer than your wave 1. So in this scenario, we are looking for a 1-2 continuation up in a wave 3, and this so-called flat is then a 3-wave A, 3-wave B, and you look for a 5-wave C to the downside, taking the low of A. Now, of course, price can take the low of A, that's not a problem, but calling this a flat is not great. Wave B hit the 1.618, which is an uncommon target for a wave B. It's not an invalidation taken from the high to the low of A. It's just that time-wise, it is an incredibly long structure. And the common target area, right, for your wave 2 in time is this, between the 0.382 and the 3. The moment you start to go to the 4, probabilities decrease. To the 5, starts to be very unlikely, and now we're at 14, right? 14. So this flat scenario is not something that I am looking for. I prefer the other scenarios by far at the moment. We always observe the reaction. We keep an eye on how long this range is going to last for, right? But this is not a nice scenario from an Elliott Wave point of view. It is, I suppose, one to at least keep in mind, but that is, you know, that's it basically. Now, if locally this would be the low and we are looking for a move towards the upside, there's only 3 scenarios that you have to keep in mind: an impulse, diagonal, or a double 1-2. So an impulse 1, 2, 3, 4, 5. We don't with all the overlap. Either a diagonal where we're looking for a 1, 2, 3, 4, 5, then a wave 2 in continuation, or a double 1-2 where we're looking for a 1, 2, 1, 2, and then a big push towards the upside. These are the bullish scenarios. So when we then look at this first structure to the upside, well, if we look at an impulse, 1, 2, 3, we never got a 4 and a 5. So an impulse doesn't work here, so we can scratch that, right? Then we have a diagonal. Now, it is too early to call a diagonal. I prefer to only start talking about diagonals once we have a wave 4 in over here. And at the moment, we would then still be working on either your wave 2 for another local low, or you're working on your wave 3 to the upside. So it's too early to call diagonals. Therefore, you can't give probabilities yet to a diagonal structure. And when we think about a double 1-2, then this needs to be a wave 1, 2, another 1, 2, and then eventually one, maybe another 1, 2, and you want continuation to the upside. The problem though is that from this low of the first wave 2 to the high of the second wave 1, price has hit in the retracement the 886. The 886 is a rare target for a wave 2, common for a wave B or a wave X, increasing probabilities for corrective price action. So a double 1-2 here also doesn't really work, and therefore it lowers the probabilities at the moment for the impulsive scenarios. And not to forget, we actually just missed out on hitting that weekly naked point of control, which would be very nice to hit. However, we could range for a while between the daily naked point of control and the weekly naked point of control, pretty much between 64.8k and 63.5k. When we look at the CVD divergences, then we have some bullish CVD divergences here on the chart, higher low in price, lower low on the CVD. Take it with a grain of salt. I always like a little bit of a bigger range as well, and we came down over here with high volume as well, right? So that is something to keep in mind, but we do at least have them visible on the chart. As you can see here, we have a higher low on price and a lower low on the CVD on blue as well as on yellow. But then again, give price a little bit of time, a little bit of ranging, and see what we are going to do locally. So if we then look at the probabilities of the different scenarios, then on the very high probability, the weekly not covered in this particular video, but the probabilities remain the same. Highest probabilities for a continuation of the trend after this range here is finished, looking for prices above 74k. On the 4-hour chart over here, which is this structure, right, that we have at the moment, probabilities are quite neutral. We have a bullish scenario with a finished regular flat and upside, as well as a bearish for a WXY. But it is very neutral, as it very much depends on this structure being a zigzag to the downside or an impulse to the downside. So that is something we first have to confirm. On the 1-hour time frame at the moment, price over here extended quite far, right? So this move to the downside extended to the 2.618, right? And this generally favors a wave 3 compared to a wave C with regards to the probabilities. However, it won't be the first time a wave C extends to the 2.618. I've even seen wave C's go to the 3.618 and also even a 4.618, which we had, for example, over here, right? So wave C's can be very long. They can really mimic a wave 3. But what is most important, and what I will keep an eye on, is a potential wave 4 range. The wave 4 range is most important for an impulse, 1, 2, 3, 4 and a wave 5. If we don't get this wave 4 but instead move to the upside and hit the 0.618 to invalidate it, the probabilities increase for an ABC, and we're going to be looking for the longs and higher prices, right? If this range is going to be long enough and then make another low, the probabilities increase for a 1, 2, 3, 4, 5 wave move, a retracement and a continuation to the downside. On the 15-minute time frame, which is this little bit over here, the probabilities at the moment are higher for price to make another low, ranging between the daily naked point of control and the weekly naked point of control, right? But it is very difficult to count any bullish structures here at the moment, right? When we look at the bullish structures, start of an impulsive move, only the diagonal would be an option at the moment, but it is way too early to call. So therefore, the bearish scenarios have a higher probability with a 3-wave corrective structure to the upside locally. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.